It's Equity News on Equity Access, your cross-section of the stock markets and of developments in the Zimbabwean economy. A splendid evening it is to you. Thank you for joining us as we broadcast from our Hampton Studios in Harare. I'm Ibn Mabunda. Let's get started. The People's Own Savings Bank, POSB, says 4 international investors have expressed interest to acquire a stake in the bank following government's move to privatize some of its assets by year-end. This was expressed by the Chief Executive Edmo Kandlela during an annual general meeting held in the capital this morning. Our Equity Access team was on the ground. Let's have a look.
Government has come up with is the privatization, and I think the avowed intention is they want that to happen. How and where it will happen and how it is going to take place, perhaps it's a discussion which within government itself. A tender for the procurement of the transaction advisory services was done, and it closed on the 6th of June, and we have had to actually put in place an evaluation committee, which we anticipate, I think this week, they should be sitting within the 14-day period so that they can actually adjudicate, and then the duty of the transaction advisor will stretch from the financial due diligence on the institution and evaluation of the bank to negotiation of the share price and issuance thereof. That's when then we say we finally got a strategic partner. And we are saying this process will actually see us perhaps getting on a footing for capitalization and also for fiscal.
At the same time, the bank bemoaned the worsening macroeconomic conditions that have affected the bank's relationships with other international players. Again, let's have a look.
Do a report, and I know there's a latest report where we may have some challenges a bit with most of the institutions that were based in Zimbabwe. And we find that the bank was not spared from that. So our correspondent banking relationships in terms of the euro and the dollar was affected. And our partner, which was based in France, actually did terminate the relationship. But what we then remained with was a rand correspondent banking relationship with the South African bank. And the European correspondent relationship was not utilized much, which we had created with a European bank, another corresponding relationship, but it was a bit on the expensive side. But we didn't quite utilize that much because it discouraged transfer of very small amounts, and it was encouraging huge amounts, hence the high charges that we were charging. And then due to the demand on its foreign commitments, had no choice but to resume this relationship again lately, which was we are trying to come into discussion with another European bank.
Now to just have a quick look at some of the matrices that were presented during the trading update for the bank. Now this would be the cumulative annual growth rate in terms of the fees and commissions against the net interest right at the bottom. You'd find that there's actually been a significant increase from 23.6% in terms of fees and commissions income in 2017 to 27% of their net income that they've actually generated. You look at the net interest after provisions, which has also increased from 10.2% to 14.3% in terms of their revenue. Now this is the number of their point of sale machines 2017 performance against 2018 performance, which has scaled from 1,151 to 1,907. Now of note is the fact that the bank also expressed how much of their revenue is likely to come through their digital approach, which they hope to scale up during the course of 2019. Meanwhile, inflation crawls towards the 100% mark. The latest inflation figures from Zimstats show a May inflation figure of 97.85% against an April figure of 75.8%. This means prices on average grew by 97.85% between May and April of 2019, marking the highest inflation level since dollarization and a successive month-on-month gain stretching over 9 months. Month-on-month inflation came in at 12.54% from 5.52% in April. This is the second highest month outturn since October of 2018. Inflation has been driven by a weakening exchange rate between the RTGS dollar and the United States dollar. The The local currency has since lost over 60% since February, and given that local produce on markets is prices pegged to the United States dollar. Now, just to have a graphical presentation of how Zimbabwe has fared since October, when the monetary policy pronouncements were issued by the central bank. Now, you look at the upward trend there, it's been moving upward since October, and the year closed at 42% inflation, and now we are at 97.85. The IMF has projected that we'll close the year at 40%, and time again, the finance minister has said that we could possibly reach perhaps a single-digit inflation by year end. But as you can see, the trends continue to. Figures are down 40% in value against prior performance as at this point, which is day 59, having generated $592.25 million, which is 4% below $1 billion recorded in the same period last year. Stats from the industry regulators are actually revealing. Stats show that 316.32 million kilograms of tobacco have so far been delivered during the period under review. Now, to get into the teensy-weensys so that you get an appreciation of how the stats actually stand at this point. Now, this column here is the 2018 performance. This now is the 2019 performance. And as you can see, in terms of the mass sold in kilograms, for 2018, this stands at 197 million against 177 million at this point. Then in value, in 2019, we stand at $332 million against 574 recorded in 2018. And there is, in terms of the mass sold, a 10% decline against prior performance, vis-a-vis a 42% decline in terms of the value sold up to this point. This concludes our evening news bulletin. Up next is a news review. Please stay tuned. Welcome back, viewers. It's time for news review, and with me here is economist Tinashe Kaduo. Tinashe, good evening and welcome to the show.
Good evening, Iban. Good evening, viewers.
Fantastic. Let's cut to the chase. Inflation figures are out and they don't look so good. 97.85%, nearly 98%. What is your perspective where this is concerned?
If you look at what was happening in the market, it's not a surprise that annual in 8%. Actually, if you look at the basket that I follow as Agri-Taxes, much of those commodities, they've gone up by closer to 100%. We follow, a selected basket that we selected for a family, which we think is the optimal basket for a family of 5. So that basket, consists of commodities such as your toiletries, your key basics, your foodstuffs, your meal milk, your cooking oil. If you look at cooking oil, for instance, it went up from the April figure of an average of $15, $1,500 per 2-liter bottle, to now the average of $25 per 2-liter bottle. That's actually a 100% increase. The same happened to your washing powders. The same happened to your items such as your bathing soaps and etc. So a figure of 97.8% on an annual basis, to me, it didn't come as a surprise. I actually anticipating a much higher. So if you look at what has been driving this inflation upwards, if you look at our graph using these official statistics, you are seeing this dotted line, which is your food and non-alcoholic beverages, is the one that is actually driving all the overall index upwards. Then if you look at your bread and cereals, by the way, maybe your food and non-alcoholic beverages, it has got a weight of 33% in the consumer price index. Then the bread and cereals, it has a weight of closer to 12%. If you look at it, when it goes up, when it goes high, it also drives the overall index upwards. Your non-food inflation has been below the all items inflation. What we have seen happening in the non-food inflation, we have seen things such as your rentals and your transport costs, as well as your electricity. They have been fairly constant in terms of pricing. The government, especially in terms of electricity and water, it has been subsidizing the general public, especially even the transport as well. With the coming in of Zupco, it actually helped driving down, or trying to cushion the inflation rate not to jump so fast. So we are saying that these government interventions through those subsidies, they are actually helping to some extent to help to lower or to reduce the rate at which prices are rising. Otherwise, if the government didn't implement those subsidies, we could have been seeing inflation actually skyrocketing, maybe towards to Professor Ange's levels of around 300%.
Okay, now let's get into POSB. They've expressed that they've got international partners who are looking to buy a stake in POSB. Is that a positive for the bank?
It's actually positive, for the bank, not only for the bank, but for the market as well. If you look at what's happening in the country, we are looking at a government which is now trying, to sell or to privatize some of those entities that have been more of a burden to the fiscus. If you look at how those state enterprises and the parastatals were performing over the past years, they were actually always knocking at the fiscus for budgetary support in terms of working capital requirements, in terms of their day-to-day operations. But POSB, to me, it was one of those exceptional entities that has been performing well over the years. If you look at its revenue performance at 23.8 million in December 2014, then right now up in December 2018, 44.5 million. It's actually a bank that has been competing with other banks, and you couldn't even point out that this is a parastatal. It was actually competing like more of a private player. So to me, it came as a surprise that the government is trying to privatize that bank, looking at how it was competing. But it's positive for both the company and for the economy as well. What I like much is when you are seeing an entity which was controlled by the government getting that attention of foreign investors, it means that some entities in Zimbabwe, or the Zimbabwe name, is to the government, which is actually a return to the major shareholder, which is the Ministry of Finance.
Yeah, a dividend of $4 million RTGS dollars. Are we likely to see a continued path where that is concerned, given the macroeconomic setup?
But you see, if you look at what's happening, if it happens to get an investor this year, a new investor comes with his own demands, and when you restructure a company, it also faces some of those adjustment costs related to it. So those are some of those things that might affect it. But if you look at the outlook for the banking sector, I think it's positive. They'll still continue to benefit from this cash-light environment, and POSB is one of those banks that invested much in infrastructure. So it will continue enjoying that much growth in terms of the non-funded income line, as well as those agents fees that it gets from the likes of Mukuru and other remittance agencies that it's into strategic partnership with. But it's also a bank as well that has got a good agency banking model, which I think will continue sustaining the non-funded income line. Then also its microfinance business is one of those businesses that is as well promising, and I think it's actually a sector that will help sustain its earnings.
Well, thank you, Tinashe, for the perspectives. Thank you for staying with us. Up next is a look at the stock markets. Don't go anywhere.
Good evening, ladies and gentlemen. Welcome to Markets Daily on Equity Access. My name is Anis Chumbumu, and joining me today is Respect, our chief analyst. Respect, how are you doing today?
I'm doing just good. And you, Anis?
I'm alright. Let's just delve in straight into the markets today. The market has stretched for 12 weeks on a good rally. A couple of dips within those 12 weeks, but then marginal dips there. But then it has sustained a very one of the longest rallies since 2009. We are looking at one of the longest sessions, which was 34 sessions on a positive run there. Now today we have inflation statistics that came out pretty much discounting how our currency is quickly dilapidating, and one of the reasons that we have spoken about in terms of how the stock market has been performing was how the currency is somewhat causing for the risk aversion that most investors have taken into consideration. Today, the market goes up 5% on the all-share index, 5.61%, for it to settle at 218.39. The industrial index settles at 729.07 points, which is a record high, an all-time high, pretty much, which is up 5.56%. Mining's index had a very strong move there. Bindura, of course, did enjoy a good move from about 11 cents to 13 cents today. Top 10 index is up 6.89%. Major mover for that index, InScore adding 14.27%. Your take, where do you think we're going? Is the market going to continue on this rate? Where should people put their money if it is like this?
So I think you've summarized performance very well in terms of where we're coming from. So this is one of those rare moments on the stock market where we are seeing some gains which are beyond average. A gain of about 6% on the stock market is quite huge. It obviously takes the heavy caps to move in order for us to realize such gains. I think it reminds me of 2013 August when we realized a market shock in a single session of close to about 10%. That was a huge decline just after the announcement of the presidential elections of 2013. So obviously such occurrences in the market, they do have a meaning. They show you what sentiment is like from an investor perspective. So in 2013, that was just after the presidential election. It obviously meant a lot in terms of how investors were looking at Zim and the prospects that would come to Zim post the elections. Of course, it was an adverse gesture. But now the gains that we are realizing on the stock markets are not a good thing when you're looking at from an overall perspective of the economy. This is a clear risk aversion where investors are trapped. There are a few assets which one can play into it. So we are seeing a consolidation into stocks where people are trying to buy shares just to run away from unhedged balances in the money market and basic deposits within banks. So there are clear bids. If you talk to brokers, they'll tell you that across the market there are some bids which are going up on a daily basis in terms of the asking price. So I think all that is a reflection of the fundamentals and the stock market. In my own view, I've always kept my view has always been that we are likely to see further consolidation. I don't think we are done yet. The statistics that came out today in terms of inflation states, we're now sitting at 100% in terms of the national year-on-year CPI, and that's quite a huge figure. It obviously brings it scares off investors, and it actually drove today's gains to those huge realized jumps that we have seen. But I think it also comes after the president's Friday talk on Capital, where he said Zimbabwe's currency is currently the strongest in SADC, and that's quite misplaced. It shows a president who is not at par with the reality in terms of what economic value is. If you're looking, for example, the difference between Delta sitting at 383 and BAT, one can say which one of the two is is a strong counter. So you can't say because BAT is trading at 3,500, therefore it's stronger than Delta, which is, when you're looking at the relative strength in terms of market capitalization and per share value, you would realize that Delta is actually a stronger counter than BAT. So I think all those statements, they shape what investors can look up to, what the generality of Zimbabwe can also look up to in terms of their expectations. I mean, in terms of the what's driving the economy, where are we going, and that is also looking at the people who are driving the economy, whether they are aware of the indicators such as this. So I agree with you. It's not a good thing that we're seeing. Of course, in terms of shares, it's consolidation, and I think there's going to be further consolidation in the coming weeks. I think I'm actually forecasting an also good outturn for the local currency, and that might mean a serious consolidation, especially this week. We might see weekly gains upwards of 20%.
Okay. Just to zoom in a little bit on one of the four indices, the top 10 index, we realized that there was a very huge jump by INSCO of about 14.27% there. This movement hasn't been hasn't really come out from such a counter in the current year. But then, what do you think is the normal valuation, or do you have any insights or thoughts around INSCO's?
When the situation is like what it is right now in Zim, it's not the way somebody looks at fundamentals is all different. Fundamentals from a company perspective come from company-specific fundamentals and economic fundamentals. So when you have a company with a good operating model, optimally organized, profitable at operating level and all that, you would say that its fundamentals are okay. There's clear demand, there's clear supply, value chain and whatnot. And then you look at economic fundamentals, is the economics of the country right? So at the present moment, what's driving these valuations is not just company-specific fundamentals.
Okay.
When you're looking or valuing these companies from a basic company-specific fundamentals, you would find that the entire market is overvalued, because you can't be trading at some of those crazy PEs that we are realizing across all these counters. So people are basing their valuations on economic-specific fundamentals. When looked at from an economic perspective, you wouldn't just you're buying into a counter just to save. You're looking at what you're losing on in terms of your bank balances and what you could possibly lose in an asset such as a stock. You know that Delta is going to keep on producing beer. In a year or two, the demand is going to resurface. Therefore, you are preserving value on a long-term basis. So you would rather buy an overvalued counter at the present moment just for you to preserve value on a long-term basis. But you can't leave the same money right there. As bare balances in your bank account. So all these valuations, I would say, we are in an overvalued market from a ratios perspective and whatnot. But when you're looking at economic specific fundamentals, we might not be in a very pleasant space.
All right. Fun fact: INSCO has spun off some of the great companies on the local bourse. Talk about your Nat Foods, your Eggs, your Simbisa Brands, Padenga. You name it.
It really had some very solid brands. Padenga and what. That's the giant of the market, and they still have got a very solid model. They've been buying assets in ProPack and Pro Brands. That's quite worth an investment.
Yes.
And they've also been expanding in terms of their light manufacturing site, and they're still quite solid in terms of the model that they've retained. And obviously, as time goes, they will spin off and they will buy other assets. That's what they're known for.
All right. All share index is up 15.11%. Mining's index 9.91. 15.21 for the industrials index. Top 10 is up 18.81%, all on a 5-day trend there. Now, 23 counters exchanged hands today. 20 of them were risers, one was a faller, and then leaving a remainder of 2 counters that were pretty much stable. We did consolidate an increase of almost 40% on the value traded on the stock market.
Yes.
One of which we did talk about Bindura being a huge mover in terms of in terms of the mining's index. Now, Bindura Nickel did add 18.18% to its share price to settle at 13 cents. It did trade about 1.5 million shares today, which translated about 204,000. Don't you think it's a steal?
I think there's still value in that counter. My crude valuation would tell me that Bindura is an exporting company primarily. So due to the fact that we have changed the currency in the country, it means whatever valuation that you give on Bindura, you have to multiply by the interbank rate. So if you multiply the Bindura's PE at the current exchange rate, it would give you a price of upwards of 30 cents. So at a price of 13 cents, to me that's obviously a big buy. I think we'll start to see a slowdown at levels above 15 cents. It will easily go up to 15 cents. If you see such strength in demand at 1.5 million shares at 13 cents, that really tells you of the real underlying value. But it has been slow to come on board, and company-specific fundamentals were not that well up there. But lately, people are seeing the value in terms of the exportable mineral that they hold. So that alone is money, and an easy conversion can give you a price upwards of 30. So I think 13 cents is quite a low valuation, and we are likely to see further consolidation. But broadly, I believe what this picture shows in terms of your risers and fallers at you said
20 up, 1 down.
Yes, so that's quite a telling statistic. We are sitting at a market breadth of 19 counters in the positive, and last week we didn't have even a single faller on a week-on-week basis. It shows you that the market presently is a buyer's market. There's strong demand. People are obviously looking to try to have a grab on one of these counters just to cushion their values. So it's really a telling story. FCB, it's an unusual casualty. I think they gave a trading update where they highlighted that in the first quarter the transactions value has been coming off, and I think that's mainly to do with the restructuring at the group, especially the reintegration of the core banking system, which obviously affected their business, their transactional business. But it's quite unfortunate. I think they will rebound, and they're yet to find form post the whole transition thing, and it's still ongoing. But I think it's now at a phase where we might see stability once they bring in a new system on the ground, and they also further tweak their model. They're now pushing more on the retail side. They've been growing customers at over 1,000 a month, and that's quite solid. So we might see some changes as we go, but an 8% decline is quite.
First Capital has had a couple of oscillations the past week, but yes, it is unusual for it to cap up the day with such a huge decline of about 12.39%. Now, top riser was ZHL settling at 6.04 cents. Insco came in after Bindura. Citgo International Limited rose 12.12% for it to settle at 185 cents. Econet added 9.67%. Now, I suppose we have pretty much touched on how the currency has performed within the beginning parts of this session. But just to give a quick update, Old Mutual implied rate has broken the 10 mark there. It is settled at 10.57. We look at the parallel market is trading at about 9.25 as an average, and the interbank rate is now firmly beyond the 6 rate at 6.08 to the dollar.
So the immediate statistics that are in the market right now, we have been given the values that have been traded since the consummation of the interbank market, and those values are sitting at an average of about 1.9 million a session. I think we're coming from 250 something thereabout, if not 155. Actually, it's 155. Okay. Then not divided by the number of days, we're sitting at 1.9. So that's really a telling statistic as well. Why? Because it shows you supply levels. So we have had supply of 1.9, but my own crude analysis shows that we demand at least 10 million on a daily basis. So if there's that mismatch, it means it keeps on pushing the price. But why is the price not being pushed to optimal levels? It means there's an extra hand that's coming into that market to cushion the level to which prices can rise. And it can only be the authorities. So obviously the authorities have put a cap on a daily basis. But that is what has widened the gap between the parallel and the normal market, or the interbank market. Why? Because government is having a hand on the other side. So people are having off-market trades. And also the black market has found life due to those caps, or the government's manipulation in that primary market. But broadly, I think the situation cannot be normalized soon. Why? Because there's always that overhang, there's always that excess demand that will still hang on in there. We have got more than 500 million in terms of outstanding payments that are already due, that are supposed to be remitted. Of course, most of them are covered by government statute, which says we'll honor them as at 1:1. But most people are looking for cash to possibly pay out, either in terms of dividend and whatnot and whatnot. And some of them are now trying to buy on the interbank market, but there's no liquidity. Manufacturers as well, they demand liquidity in excess of 1.9 million, but there's no supply in that market. So at this rate, we are not likely to see a subsidization of the rate in terms of rising. So my personal view is that our currency is not acceptable and has not been accepted by the market. Maybe government should have fully liberalized. We could have had hard lending, but then I think it would have normalized over the course of the trading days. Somehow we could have found our balance along the way. But as it stands right now, as long as there's that manipulation in terms of government's hand, I don't think that we are likely to see a slowdown in that trade. There's always that suspicion, and there's always going to be some off-market trades. And exporters will always try as much as they can to hide their exports from the normal the government's on books. So I don't think there is a reprieve as yet.
Right. Well, by and large, the stock market has had a lot of influence coming from economic fundamentals, not much to do with your company fundamentals that should push your valuations upwards or closer to their real value. Now, values have gone beyond normal numbers that we would probably expect in this economy right now. But with the continued invisible hand by the government within this market, it may continue on that rate. Now, from Equity Access and I, good evening. Please don't forget to like, follow, subscribe, and like our YouTube, Twitter, Facebook, and Twitter accounts at Equity Access.